Hi, welcome to the Market Alerts for Tuesday, the 25th of January 2021. So futures tumble on rising Fed fears, geopolitical tensions, obviously between Ukraine, Russia, America and UK. Since we are coming off market highs and with higher rates on the horizon, investors are choosing to stand on the sidelines. Now, this is the earlier news item from yesterday because obviously things changed as we went through the day. Tech stocks, reality bites moment has arrived. Tech stocks have taken a thumping this year, a well-timed reality check or a threat to bring down the whole market. Like I say, this is before the end of the session. Bloodbaths in the streets when the market bounces in 3, 2, 1. This will be the narrative, enough blood in the streets. And this is what I've been talking about with regards to Powell, because in 2018 they reversed the decision to taper and then went back to QE. So this is what this headline is alluding to. Thank the mystery put seller for today's historic market reversal, an explanation of what behind today's malicious plunged reversal. Now, as you'll see in a moment, the market put in a spectacular reversal, and it wasn't the plunge protection team for a change. It was a 3.1 trillion put sale that created the move back to the upside, which is, it could be the Fed that was behind it, who knows. How rate hikes may trigger a recession. Again, they're just going to take the risk. I'm not going to read the subhead there, but you can see it. So a lot going on yesterday, and in the implied volatility is quite telling really, because we had 2170 the day before. We had a 1300 point swing yesterday, and the market's only got 21.99, and yet we had 23.78. So something's gone on in the options market. It's called the gamma trade, which I'm not going to go into details with, but if you have a look at the article with regards to the put seller, it's all explained in there. But this is bizarre, and in fact I even tracked the whole volatility from day one, well, back to 2006 in this chart. And it's bizarre that we're seeing, just 21.99 when the other peak with the market shakeout and correction wasn't as deep, and it was at 23.78 and then 21. So we've got this sort of sideways move there in the volatility, where I suppose at some point we could see this spike out as well. Well, we need to see it spike out if the market is going to correct to the downside. News for today, not that it matters because the market's already got news, hasn't it, of what it did yesterday. It's going to have to find its feet from yesterday, whether the selling continues to the downside or thanks to the reversal last night of some 1,000 plus points in the Dow, the market continues to move to the upside. Meanwhile, in the gold-silver ratio, silver's still being hammered, no surprise there. Dollar up and gold up as well against silver, which is why you're seeing that bounce there of 2 ounces of silver to gold from 75 to 77. You can expect this to go higher as well. They're going to hammer the price of silver over the next few days. I would think, especially if they go into if Russia go into Ukraine, because the dollar will spike. But we'll look at that in just a moment. So here we go then, Wall Street. Yesterday, you can see massive bar. I'll just give you the range for the bar. Let me just grab this tool. It's a bit ballpark, but you get an idea. 1,368 point range yesterday. The market coming off the lows, but not buying it overnight, are they? At the moment, there's seems to be no upside interest there at all, and it's certainly got a hold above that 33.49 that it sailed through yesterday, where we had the last market move back to the upside to create the new all-time high. So it's even though the market went through it yesterday, it's very important that it try and holds at this level today. If not, we'll see a retest of the 33.521 level. In the 30-minute chart, you can see the V-shaped correction there, straight down, straight up, more or less, apart from a bit of selling pressure there. But look at that massive move to the upside. Overnight, it looks like the market's not doing a lot, but it's sitting at the DP at the moment. And I suspect this is quite some range as well, even though it doesn't look a lot. Let's just have a look. Yeah, it's 200-point range overnight at the moment in this sideways channel for the Dow. So it's a good range, that is, for a sideways market in a 30-minute chart. Meanwhile, in the German DAX, a similar picture. And I'm on the daily chart here, but I'm just going to switch to the weekly. I had to yesterday afternoon just to see where the market was trading down to, because it went through all of the fibs in the daily chart. We'll look at that in just a second. You can see we're right back in the chart to June of last year. That's June 25th. And you can see there, this is a very, very, very important level, that 14,842. When we broke 15, I thought we may be moving lower, but we didn't. It found support, and they brought the market back to 15,000, and then moved it back, and obviously moving with the Dow, but didn't move as much, did it? Because you look at the 30-minute chart, you haven't got that same V shape all the way back that we see in the Dow. We're lucky here if we've got 50% of the move from this high to here, 62.50. There you go. So we're at the golden ratio, the 50-bar moving average, and the market then moving back to the downside. It's sort of curved around a bit like a saucer shape there at the moment. But again, a very interesting picture here, because we need to get back above the DP, the 50 EMA, and the 20-bar moving average in the 30-minute. But at the moment, quite sideways for this market. Let me just move this over, get rid of this. And there you can see what's going on at the moment. We've got a bit of resistance to the upside as well. We're back at a 50% retracement there as well. It's all going to be down to the futures and what they decide to do at the open. It's very difficult to second guess something where you've had a 1,300 point swing down and up in the Dow, and how that's going to be played at the open. It's going to be volatile. That's one thing I will say. At 8 a.m. and even 7 a.m. it will be volatile too. There was nothing in the 2-minute yesterday because of the volatility. It was outside the range of the risk that I have set up for the automated signals. It just came out of nowhere. They just kept selling all day until late on in the evening when the market reversed. But big bars, when you're getting 50-point bars in a 2-minute chart, you know that there's a lot of volatility in the market. That's in the metals markets. Interesting picture there. They moved silver down yesterday. It's not holding overnight either. Let's just go to the 30-minute chart and have a look. Actually, I just need to go back to the DAX. Apologies, I've just had a thought. I missed out the daily chart, didn't I? So let me just have a look at this. So yesterday, the market coming through those fib areas, when we were sailing down through 62, I thought it'll never go to 78. When it went to 78, well, 89 was a no-brainer. It's when it got down to these lows. And this low here is the one from the weekly chart that we've seen. And then we've got yesterday's low now, which I'll just add in there. So we've got 14,839, which we've seen in the weekly chart. So that's where we are at the moment with this. On the upside, let me just remove those, because potentially, just in case we get a move to the upside, let me just draw these fibs in from here down to here, and you'll see there. So if the market struggles at any of these areas as it tries to move higher, then watch for a potential move to the downside. So back to the metals. In silver, I was going to look at the 30-minute chart, and you can see it's guaranteed, isn't it? The London fix, the LBMA, midday. If they can hammer the silver market, they will. And I love it. I just absolutely love it. I mean, it just gives me the opportunity to keep accumulating physical silver and adding to other positions that I have as well. Again, you can see this on Friday. It's just, you know, I've been through this more or less every day for months now, how they'll do this. The only exception to the rule was last week when they moved the market up for 3 days. But outside of that, that is the exception to the rule. and there again you can see that. But after or before that, you'll see that same pattern of moving the market to the downside. So last week was an exception because of the warmongering one there. That's when it all started. Initial move to the downside there, and then bringing the market back. But they were heading up, and this is interesting as well because they were heading up to the 200 MA in the daily chart, and now we're overbought as well. So they've got to bring the market back to any one of these levels. So watch that for the silver market. In gold, you can see holding quite nicely there at the moment on the upside, which is why you're seeing that 2 ounce increase in the gold silver ratio, and in the dollar moving higher overnight as well, putting downside pressure on the silver market. Bit of pressure on crude yesterday as well, quite a volatile day, a lot of volume. This needs to turn around and move back and take out this recent high if prices are to move higher. Certainly any conflict will see crude oil move to the upside. So there we go. That's a quick roundup of what happened yesterday. What to expect for today is a tough one. Based on what we see with the climatic action, it's sideways to higher would be the first port of call unless something happens with the narrative with regards to Russia and America and Ukraine. Then that will send the market lower. So we don't know how it's going to play out because there's too many mitigating factors in the background and potential fundamentals that can create such a swing, and the volatility, of course. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.